Good day, all. Ira Epstein of Linn Associates with your agriculture update for this Thursday, the 11th of April, 2019. And the time right now, well, we're pushing 1:50 p.m. Central Standard Time. Central Daylight Time, excuse me for that. As you can see, a red day behind me in the stock market. Metals getting smashed today. That's the only word I could use. Dollar up as we're looking at most of the foreign currencies down as U.S. rates climbed a little bit, and the energy's getting their first real hit that they've seen in quite a while. So I find that interesting too. Now in the grain markets, we're down in the corn and the soybeans. Word was out this morning that between March 9th and April 4th, that China bought up to 78,000 metric tons of pork. That's about triple the size that they bought the last time from us. And that in large part, why it's negative on the grains, is they've culled about 30% of their herds. I'm talking obviously their pig crop. And what goes on when that takes place is, number one, they need to replace it, of course, but they've still got the African swine flu. How they're going about that? Well, they don't have enough current pork for their people, so they're buying pork from abroad. So that set the pork market up. On the other hand, it also means in the near term, just the near term until these herds start breeding again and so on, they don't need as much grain. You've got 30% less animals eating. Therefore, that's a bit bearish on those markets. Let's take a look, if we could, at what the soybean chart looks like. You know, one of the things I've been pointing out is this 18-week moving average of closes, and this is just a chart of closing prices only. It's one of the ways you can smooth markets out from the spikes and so on. And what the market's having trouble doing right now is it's fighting at that 18-week average, trying to stay under it for a more bearish phase in the market. When we take a look at how the chart action is going right through here, you can see the market's reaching down, trying to break a bit back. And if we put on the swing line, you got up high enough to take out a previous high. Like so many futures markets right now, and I mean there's a lot of them in different complexes, you're not putting together sustained trends. You're getting this choppy action going up, coming right back the next day the other way. No exception here. The market was up yesterday 3 1/4, down 6 3/4 today, made a highest high for the move and then came cracking down under it. Where's the market been fighting? I want you to look at how many times it's hitting this 18-day average of closes. One of my theories in trading is that markets look for neutral areas. And the reason it's neutral is because so many traders use moving averages. So from the moving average, it can be an 18, a 19, a 20, whatever you're comfortable with. I'm comfortable with the 18. The market plays at that, and then eventually it decides if it's going to break away or go to the upside. That often is the case. In this market, number one, I'm finding it very hard for the market to have a trend. That began way back here when you had an outside day down and then took out that day's high. You really have never recovered in terms of being able to trend one way or the other since then. In terms of Bollinger Bands, you can see the upper band is right here. This is the 18-day average. That's the lower. You haven't even gone to hit a band for the latter part of March. So here we are 11 days later, and you're not able to move to one extreme or the other. You're just hanging around that number. And again, momentum is not helping. Momentum's going flat, sort of what's going on right here in price. Admittedly, it tried today to turn down a bit with the red line underneath the blue, in other words, the K under the D, but we'll see if it follows through. If it does, and if this gathers momentum, then that 885 3/4 area comes back into play. In the meal market, we have a pretty consistent pattern of lower highs. Now, this 311 is the same as this price here. So you've got lower highs, lower lows. Bearish. Momentum pointing down. Bearish. Bias down. Unless and until the market gets over 311 on the current chart pattern, the bears have grabbed control of the market. The question is, can they push the market back down into the support area wherever that Bollinger Band comes in? In soy oil, the market's got a pattern of lower highs and higher lows. Just keeps narrowing in like that on you. And it's all happening at this 18-day average of closes. The market did close over the 18-day average today, so I'm going to say it has upside bias. I'm going to say I don't know what the trend is because of the lower highs, higher lows, and momentum is flat. A difficult market. In the corn market, another outside day down. This has been in a downtrend. It's had the lower highs. It certainly has the lower lows. It is oversold. The question is, does it get enough momentum to whatever this lower Bollinger Band is, get to it? That's not going to be easy. And the reason it's not easy is the way that the pattern is developed. This band is falling. It's not even trying to arc up. So each time the market even falls further, it's like the band runs further away from it. So something to keep your eye on. Having an outside day down means I'll be looking at today's high. That should not be taken out on Friday or Monday. If it is, I call that a bear trap and would not be surprised to see momentum shift, maybe a run for the 18-day average takes place. In the wheat market, the trend is down with lower highs. I'm showing the arrows to the most recent highs, lower lows. You went to the lower Bollinger Band, got a little bit of a bounce. But what's really happening is, do you notice how the black lines are more or less going sideways? This is a market that may have spent itself to a large degree on the downside into that lower band. We'll find out soon enough, but that's what it's looking like. The trend is still down, though. In the sugar market, notice how we haven't been able to get up on any of these recent highs to the upper Bollinger Band. As hard as the market tries, it sort of fades. It just sort of misses there, and then it comes back and finds itself stuck again between the 100-day average in green and the 18. And you can see that that's been happening on a regular basis. Support back at 1263. The seasonals at this time of year are often to the downside, not the upside. If we look at this high that we made yesterday, that number is 1283, and I go back to this high, it's 1284. If the market were to get under 1249, I know it looks strange like that, but you'd have lower highs, lower lows. Maybe you're putting in a test of the lower Bollinger Band at that point. Momentum's not helping. It's just overbought, hasn't turned down. Coffee, another shot at a failure. The market tried the upside, couldn't do it, came back, challenged that 18-day average, and again failed. So you've had one shot where you tried to stay over this red line, got to go all the way back into February to find a point. Now what's going to happen in coffee, and I was reading stories on it, it's getting so cheap that it's going to go under the cost of production, so production will cut back. What's the cure for low prices? Cut back supply. So eventually that's what traders are saying will happen. On the chart-wise, you're still in a downtrend, oversold as can be. Remember what I said, each time you challenge the Bollinger Band, don't be surprised that you pop away to the other side from there as the pros take money off the table. At least that's what I believe goes on. In the cocoa market, a big reversal day to the downside. The key will be tomorrow. When the market reopens, it's actually late tonight. Do you lose or keep the embedded reading? If the red line gets under 80, be cautious. This could be a sign where the pros start not supporting the market. If that gives ground like that, you could fall back into whatever area the 18 and the 100-day average are then. This 18 should probably climb tomorrow because you're going to lose some of these numbers on an 18-day average back here. But that'll be the general area. Right now, I can't tell you. I need to see that opening. In the cotton, remember what we just said, when you challenge a Bollinger Band, be it the upside or downside, it is not a surprise to me that a market stalls out at those numbers and goes back and tries to get to that 18-day average to regroup. You tell me that's not going on right there. It's just an example of how it works. You did not embed here. You just got overbought, but you still pulled back, and that was the interesting part. In the cattle market, once the pork jumped today off the word of that 78,000 metric ton purchase made a week ago, it initially went up with that. It held on to the gains, but gave back the lion's share. You were 200 points on a closing basis off the day's high. And what I so often see is traders will go in and they'll say, oh, if pork's good, cattle's got to be good. It's not quite the game as to how it works. This market also has a lower low, higher high. 120.82 is the 18-day average of closes. You got all the way up to 122.25 and you close right back under that number. I don't see a trend here. In the feeder cattle market, the market refuses to close over that 18-day average. You have an outside day to the upside. If you were to take out today's low, You put into play then the possibility of coming back to the 100-day average and the Bollinger Band. If the market's good, it's got to keep this building and get a close again over that 18-day average of closes. Right now, you're starting to get a pattern of lower highs and higher lows, which means the market is losing its downside and upside momentum. Last in the hog market, a good strong close up 125 points, but well off the day's high. You hit limit up, which is 300 points this morning on that news of the Chinese purchase, but you sold off rather sharply from it as you got into this old region of these area right here of the resistance. A lot of people think that the way to play this market is on breaks by calls. Don't let the market knock you in and out on the futures. Try to play the call because expectations are there's going to be even larger purchases yet to come out of China. We will be discussing all that, and we are already in our Linn research. We have a group of writers here, got people from the pork business. When I say the pork business, they've worked in the packaging plants, they've worked in the field lots, they've done all this. Then, of course, a grain firm, we're well known for that because we handle so many farmers and the merchants and so on through there. So we write a lot about all this. We'll be covering what I've just talked about in detail today. We have a lot of special reports coming on as well. So if you're interested in the grains, the agriculture sector, all you need to do is give my staff a call. They'll put you on the research list, or you can go to our website, www.iraepstein.com. You'll see a carousel of free offers. You can get there by clicking up here as well if you're watching me on YouTube, and it'll come right on in. I'm Ira Epstein. You have a good day, and I'll talk to you all tomorrow.